Let's take a look at a possible bear case for gold over the near term. One thing that I'm noticing on my stage analysis screening tool is that on the watch list, barely any gold and silver mining stocks are showing up on this list currently. And that's a sign that this rally in gold and silver could be entering its later stages and could be ripe for a near-term correction. Now, this watch list has high volume stocks that are breaking out into stage 2 advances or that are continuing on in current stage 2 advances, and this list has been littered with gold and silver mining stocks all year, especially during the stage 2 breakouts in gold and silver in February of this year and the continuation breakout in June after the May consolidation. We saw lots of gold and silver mining stocks breaking out on high volume, and they showed up in this watch list. And we can see on the markets page that gold and silver are still two of the leading sectors in the market, but they could be entering, like I said, latter stages for this current advance. Now, one thing that's kept me bullish on gold, and even I did a video, my last video was on a possible bull case for gold over the next few months, but gold really isn't overbought here. It's only about 5 to 6% above its 30-week moving average, which historically isn't extended and has been consolidating the June rally for about a month and a half. So I'm not really as worried on gold as I am on the gold mining stocks. Yeah, taking a look at that gold chart for, over a longer term, we can see that the percentage that gold is above its 30-week moving average is sitting only at about 5%, and we can see that in the past gold made significant tops during its rallies all the way up to about 15% above the 30-week moving average. So 5% really isn't that big of a deal for gold. But the gold mining stocks, as shown here with GDX still has not retested the 30-week moving average all year, and that's a sign of how powerful this stage 2 breakout has been. But it's the gold mining stocks are very volatile, and it's really not out of the ordinary at all for gold mining stocks to have significant corrections along the way during their rallies and to really kind of reset the stage for a continued advance, since this sector is so volatile. So to have the gold mining stocks rally for this long above the 30-week moving average is really came from the fact that they were so oversold during the latter stages of the bear market. But after this gigantic rally, I wouldn't be surprised at all to see the gold mining stocks eventually have a correction back to these moving averages sometime this year. Now, looking at the gold mining stocks over a longer term basis, we can see that the percentage that the gold mining stocks are above the 30-week moving average has been hovering above 20% ever since the breakout in February, and the once they get above 30% or so has historically been where gold mining stocks have topped out and undergone major corrections. And really, besides the extension we've had this year, there's only been 2 other times that the gold mining stocks have been this far extended above their moving averages, and it led to multi-month consolidations both times, back in 2001 and in 2002. And that was also off of a major 4-year bear market bottom in the year 2000. So we could be set up for a repeat in history where these mining stocks would eventually go under a multi-month consolidation before resuming the bull market. Now, charts like this are enticing to people that don't have experience with market cycles, but people that have seen multiple market cycles in the past know that things like this really never end well. And this has been a monstrous advance for First Majestic Silver, but this chart is going to be ripe for a major correction at some point, given the fact that it's essentially a kind of a parabolic rise ever since the bear market ended. And again, it's not going to be out of the ordinary at all for First Majestic to eventually retest its moving averages, which will be a significant haircut from current levels if it was to happen from here. Or eventually these moving averages are going to catch up either through time or through price or through a combination of the two. Now, one thing I've seen recently, again, is that the fact that some of these really small exploration mining stocks have had monstrous advances lately. And I'm talking about the really tiny ones that, some of these companies are barely alive. They've been able to raise money in this environment where there's a lot of money being attracted to gold and silver since it's up so much this year. But some of these companies haven't really done much over the last 3, 4, 5 years, as they've pretty much been out of cash and unable to really advance their deposits. And to see things like this, where stocks that really aren't doing much that are up this much over a short period of time, tells you that so much money has floated into the sector that it's actually reached the bottom of the barrel. Really, all the stocks in this sector have undergone some type of appreciation now. The fact that this bull market has been going on for 6 or 7 months now. Here's another stock, again, like I said, not to pick on any stocks, but some of these stocks that really have been left for dead have had major rallies over the last couple weeks. And again, that's a sign of just the sector's now flooded with people that are wanting to invest in it because of how well it's done this year. Another thing that's kind of a bad sign to see is that CNBC's really been talking up gold a lot over the last couple weeks. I saw an article today talking about how it's time to bet on miners after miners are up 150% this year. It was talking about Newmont Mining. And another video was talking about how gold miners might double their dividends over the next year because of how well they're doing with the price of gold being higher. So, this is over like a 5-day period, but you've got like 3 or 4 or 5 bullish articles on gold appearing on CNBC, which is really out of the ordinary for CNBC because they're notoriously either ignoring gold or bearish on gold. So that's kind of a bad contrarian sign that they're finally jumping on the bandwagon after such a long rally. Another interesting kind of thing that I saw today was that this British billionaire who's lost a lot of money this year, but he's decided to pile a huge bet into gold. Now, I don't know exactly when he made this bet, but again, this is another sign of kind of like chasing and really some of the crazy things you see happen after extended moves in asset classes. And contrarian nature would tell you that when you see things like this and a lot of things in the media bullish on gold, you might want to maybe think about where their bets could go wrong and what the bear case could be. So really the bottom line on the near term kind of bearish case for gold is that it's not really as much as the price of gold currently, because it's not terribly extended. It's really the gold mining stocks that if gold was to retest the 30-week moving average and maybe undergo its second major correction of this year, besides the correction in May, what would happen to the gold mining stocks? And would they finally suffer, maybe a multi-week to a multi-month correction that would take them back to the 30-week moving average? That would then be the impetus for really the second leg of this major bull market that's probably begun with this transition into stage 2 that happened in February.